And finally this evening, the South African rand strengthened in early trading on Wednesday, rebounding after 3 days of significant declines due to concerns over US President-elect Donald Trump's trade policies. Meanwhile, the rand was trading at 18 rand and 5 cents against the dollar, up 0.4% from its previous close, despite a 4% drop since the election on November 5. In contrast, the JSE index fell for the fourth consecutive day, with the blue chip top 40 index down 0.3% in early trading. Stock market analyst Mushima Gama provides insight on the market's performance.
It's been an interesting time in the markets over the past few days, but mostly our South African market has pulled back significantly since the US elections. In fact, prior to the US elections, I had anticipated or foresaw a bit of a cool off in the market because it had gone up so high. The question is, for how long will this market continue falling? Is this just a correction, in which case it's a temporary pullback only for the market to shoot back upwards? Or are we now entering a bear market where share prices are going to start falling relentlessly? It's still early days. We need a few weeks of trade in order to determine that, so I'll keep you posted. When it comes to the rand, it did lose some of its value after the elections, but luckily it's still trading within its bull trend, which then means that despite the provisional weakness we experienced over those past few days, it's still in its path of strength unless it starts trading above 18 rand 70. We're currently trading at 17 rand 98. It's not too far from there, so we need to keep a close eye on it. All in all, in general, we're in limbo. We're unsure of President Trump's trade agreement policies, and with South Africa being a net exporter, meaning we export more than we import, we need to know what those trade agreements are with the US, which is globally the largest net importer. Just so that you know, South Africa's largest international trade partners in numerical order are China, US, Germany, Japan, and the UK. So the sooner we know about those trade agreements, the better it is, particularly for rand stability. For now, it just means that we have to anticipate this volatility within its bull trend. Another thing that our South African markets are anticipating is an interest rate cut from the Reserve Bank, which should be announced at the end of this month. Luckily, our CPI figures have reduced to 3.8%, which leaves room for the Reserve Bank to cut further. Huge relief for us consumers. This should then stimulate growth, which is then good for employment and GDP in general. So we're welcoming this cut with open arms.